Hooty hoo, all my stock market gamblers. Welcome today. It's Wednesday. We got the markets going up again. The Dow Jones up about 150 points. So why is the market continuing to go up? We're up about 5 or 6 days in a row. Well, the printing of money. They're expecting more money to be printed. The market expectation is higher. Now, what did I do today? Now, what I did is I put some puts on. I put some puts on the SPY. Now, why did I do this? Well, we've had 6 up days in a row. Eventually, it will break and we will get a down day. But that's not really the reason I did it. Okay. I look at the VIX. The VIX is trading at 15 and change. Okay, so if you go out just 2 weeks, you'll find options trading, for example, a call on the $16 option, the strike price at 16. It'll be trading at about 10 times more than the put at $16. Now that means that the volatility is going to be increasing. And when the volatility increases, the market typically comes in. Now here's something also fascinating. Okay, so the SPY, if you look at it, it's up every day, 6 days in a row. So it's going like this, it's going straight up. But what is the volume doing? The volume is actually going down. So it's rising on very low volume. That tells you that it's not the big breakout move that everybody thinks it is. Everybody thinks it's breaking out right now. And the chart pattern looks like it's breaking out. But I got a hunch that it's not. And I don't bet on hunches. I actually have evidence. My technical indicators indicate that it's overbought and that we will get the pullback. Now we're in earnings seasons. It can be very choppy. Earnings seasons, true, strong upside momentum in earnings seasons, but you do get a choppy pattern. And 6 days straight up means basically we've had 6 trading days of good earnings. What happens if someone misses? What if a company comes out and misses? Well, the market's going to pull back in. So I have some puts on the SPY. We'll see how they play out. I'm not sure if it's a good thing or if it's a bad thing. It's what I'm doing. Okay, let's talk a little bit today about Zillow. Zillow, oh, that's a fascinating company. Was trading at $220, now trading about, $84, $85. Okay, so its stock is going like this, and it's a real estate company, and this has been the hottest real estate market in the history of the world, but yet its stock is plummeting. Now, what it just announced this week? Well, it announced is that it's not going to be buying homes anymore. It's going to take a break. Now, Zillow typically bought about 3,800, let's call it 4,000 homes every quarter. They would buy them. But why'd they stop buying them? I mean, sounds like a good thing. You just buy them, right? Well, they can't sell them. Right now they have a large inventory, and these are vacant homes now. Zillow owns them. They want to sell them, but they paid so much for them that, they can't sell them for what they bought them for. Now, Zillow used to have the game plan. Here was the game plan. Let's say your house is worth $1 million. All right, you get that Zillow instant quote, and they go, hey, we'll give you $650,000 for it. And you go, well, why would I do that? It's worth $1 million. Well, okay, we'll talk about that in a second. Right, so you don't take it, but Zillow didn't care. You know why? They would sell your name, they would sell your address, they'd sell your phone number to brokers. I'm a real estate broker. They would offer that house, that lead, we call that a lead, and they would offer that for sale to us at $200. Now, they didn't just sell it to one broker, they'd sell it to 5, 10 brokers. So just for that one quote that they put out on their instant quote that was not accepted, they can still make $2,000 by selling that information to the broker. So they had this business model where they'd bid 35% below market, and everybody was turning them down, but they now had that lead, and they'd go sell that lead to the brokers. That's how Zillow was making money. But now Zillow got to thinking, well, why don't we start to pay what the houses are really worth? So if your house was worth $1 million, they'd pay $1 million. Sometimes they'd even pay over that. It just got crazy. But now they have all these homes, okay? So it wasn't such a good idea. The first business model actually made sense, made profits, and everybody liked it. But now they actually got into the home buying business, and they have these algorithms, right? And these algorithms tell them what your home's worth, and they were saying, here, we'll take it. And as all they did is they just put it back on the market, hoping that they could sell it higher and take a percentage of that. So they weren't really adding any value. They were just trying to be the middleman between the seller and the buyer and take their percentage. Okay, well, that's fine, but it didn't work for them because they cannot get these homes sold. They have too many homes that they're holding on to that are vacant. So they're saying, no, we're not going to buy homes anymore. We're just going to sit back and go back to our old business model. And we'll see what their stock improves. Down around $84, was it $220? Okay. Now, Zillow isn't the only company. These are what are called iBuyers. They buy and they're national companies, and let's say they're located in Los Angeles, California. Well, when someone from Lincoln, Nebraska wants to sell their home, they have to trust their algorithms as to how much the home's worth. Now, they don't really know what it's worth, and this is why they're going to fail. They're going to fail because real estate is a very local market, and I know this very well. I used to buy and sell homes. I used to be a home flipper. Yeah, it's profitable. You can make a lot of money. Now, you go, why would someone take 30% below the price of their home? Their home's worth $1 million. Why would they sell that for $700,000 or even $750,000? Well, it's their frame of mind. They're behind on their payments to the bank. The bank's sending them letters that we're going to kick you out of your house. They don't want to give it back to the bank. Maybe they still have some equity even at that 750 number. So they take 20 to 30% below what their house is really worth just to get rid of the house. And, so what we got right now is a tsunami of foreclosures coming onto the marketplace. Now, who's going to buy all these? Well, right now, 1 out of 4 of these are being bought by corporations like Zillow, corporations like BlackRock, corporations like Blackstone. Now, why do they buy them? Well, they want to rent them back to you, or they want to flip them and take the profit, take the money, so that you, the buyer, has to pay higher, or your rent has to go higher. They make the money off of you. Now, is this a good thing for the United States? Is it a good thing for the real estate market? Well, it does keep the real estate market propped up so that no one can afford to buy a house. Look, they come out and they bid on these, and they bid up. They're competing against you, and they're competing with very cheap money. They get the money from the Federal Reserve at less than 1%. So they're coming in all cash. You have to go out and get a mortgage. Mortgages are now back above 3%, and they're kind of drifting higher. Now, as they drift higher, what happens to prices? Well, prices kind of drift lower. And that's kind of what we got right now. We're getting these price improvements. They listed it at $1 million. It doesn't sell. They have to give a price improvement. They give it down, let's say $950,000. Not a price reduction. Real estate brokers, we tell you it's a price improvement. Kind of funny. Just a little funny thing. Now, home builders. Okay, so home building permits are starting to come down. They're dropping quite a bit. Very interesting. Now, okay, we got this hot real estate market. Prices are at record highs, about $380,000 for the average home in the United States. Why are the home builders pulling back on their home starts? Why are they not building? Well, they can't build them at affordable rates. The cost of building is so high. The cost of labor, the cost of materials has gotten out of control. And so they're sitting there with vacant homes that aren't selling because, well, they just basically price themselves out of the market. There is a point where no one's going to buy the house. It's just too expensive. It's too expensive. Look at, okay, with interest rates going up, purchasing power going down, home prices, the builders, they're trying to sell up here, but the buyers can't afford these. There's an affordability factor, and the affordability factor's been hit. So do I think that the housing market's going to crash? I actually believe that it will. Now, people say, Mike, it doesn't crash. It's not like the stock market. It doesn't go straight down. Well, you know what? That's kind of a myth. It can go straight down. Okay. Now, Now, I'm telling you, okay, you stop the Federal Reserve from buying these mortgage-backed securities. You put interest rates up at 4 or 5%, and you stop the mortgage forbearance, right? You stop that. You just stop that program. You stop the eviction moratorium. You let banks kick people out of their homes that aren't making the payments. You let landlords take back their home and rent it to someone that will make a payment. You see, those prices will crash. It will come down. Now, when they say it doesn't crash, look at what happens is there is just no bid. The price does come down. Let's say $1 million home, right? Okay, and the market crashes. Let's say the buyers now feel that $1 million home's only worth $700,000 or even $600,000. Well, that seller, he's going to sit there for a while, and he's going to bring it down to $900. He's going to bring it down to $800. He's going to bring it down to $700. And when he finally gets down to $600, maybe the bid drops to $500. He's got to come all the way down to $500. Now that takes time. That takes months, right? For the seller to get in the frame of mind that he's losing his butt. He's losing his house. He's losing all the equity. But the crash happened really quick. The seller just wasn't aware of it. There was just no buyers, and the market will become stagnant. I've been a broker for a long time. I know when the seller wants here and the buyer wants here, there's no deal to be made. There's no transactions happening. Transactions go to zero because the prices don't come down to where they hit the bid. And when they're coming down, they actually have to get under the market so that the bid actually gets hit and they get the sale and they get out of their property. Now, so the market can crash, and it crashes really quick, but it actually becomes a frozen market. Okay, the market just freezes up. It seizes. No buyers, no sellers making deals because they're too far apart in the prices. But it's going to happen, and it is happening slowly right now, and it's going to pick up speed when this tsunami of foreclosures hit. Now, a lot of the banks they're trying to onboard the agents to get us ready to sell these foreclosures, but a lot of people are trying not to give it back to the bank because they still have equity at these high prices. But when the prices start going down, they don't have any more equity. Then the banks will be taking these back, and they'll be giving them to the brokers to try to get them sold, and they'll sell them at anything, and that's where you're going to get this crash coming. So it is coming, and if you're a buyer, I think the only word I got for you is just have some patience. Wait it out. I mean, maybe it takes 6 months to play out. Maybe you got to wait a whole year, but do you really want to buy at the top? Look, I'm a broker. I'm supposed to get out there and tell you, it's a great time to buy. Everybody jump in. Well, even Zillow thinks it's a bad time to buy because they got out of the market. All right, I'm Tall Mike. If you like this stuff, give me the thumbs up. Really like it? Punch that subscribe button so we can talk later in the week, and we'll see how my puts do on the SPY. I bought some puts today on the SPY. Makes me a little nervous. We've been up 6 days straight. Are we going to ever get it down there? Maybe the market does only go up, but I think we're going to get a pullback here. I think someone's going to miss earnings, and that's going to send the market down in a choppy trading. We're not ready for the crash in the stock market just yet, but I do think we will get a little choppy trading that will make these SPY puts pay off. Hit that subscribe button, and I'll let you know how they do. I'm Tall Mike. Get out there. Have a great Wednesday, everybody, and we'll talk again really soon. Bye-bye now.